Okay. Good morning, everyone. Welcome to the 24/7. My name is Niharika Valia, and I am with you with the area of accounting. So I'm going to continue with module A of the examination. So please confirm if I'm audible as well as clearly visible to you. We'll be covering the area of AFM today. Okay. So let's begin with the class. Okay, here comes the first question. The first question says, due to which of the following contingent liabilities are shown in the balance sheet? Contingent liabilities are those liabilities which are not certain yet. There is a scenario that they might or may not, materialize. So then, which of the following contingent liabilities are shown in the balance sheet? Which of the following reasons? Dual aspect concept, convention of full disclosure, convention of materiality, or the going concern concept. So under this concept, what exactly happens is, due to which of the following contingent liabilities are those liabilities which would include maybe a legal suit. When there's a legal suit, there's a chance that it might materialize, it might not materialize. That means the other party can win or maybe they lose. That depends upon the scenario now. That means this is called contingent liability. And then these are shown in the balance sheet. How are these shown in the balance sheet? Balance sheet is the financial position of the organization. What is exactly the financial position of an organization? How does the organization exactly works? What is its net worth? Everything is shown in the financial position. That is the balance sheet of the organization. But the point is that since the contingent liabilities are not certain yet, और दूसरा okay. So then when we talk about this area in terms of the financial position, net worth is shown, net worth of an organization, but that needs to be given in certainty. If we want to win over the investors confidence, we need to be certain about things. How do we get certain about things? By having certainty about it. So with that certainty, contingent things should not be given in the balance sheet because they aren't certain yet. They may or may not happen. So that is why it would be taken under dual aspect concept, or the convention of full disclosure, or convention of materiality, or convention, or that is going concern concept. Among them, a few are conventions. Conventions are those things which are a practice, and the other one are basically the basic principles. Going concern is an assumption. We assume that it's always there, and then dual aspect concept is a principle that we follow. So, among the following, which of the following is basically the reason behind putting the contingent liabilities in the balance sheet? And that too, remember, whenever we are making a balance sheet, that is the financial position of the organization, in the footnote we show the contingent liabilities, not in the balance sheet, because it's not a certain thing. It may or may not happen because of the uncertainty. It will always get a place in the footnote, not in the exact balance sheet. So then when we talk about this, it is basically convention of full disclosure. That means in terms of the organization, what happens is the convention of full disclosure pushes the organization to explain everything that is happening around it. So they have to specify all the things in one place, at one place. Okay? So that is how we define it. Now comes the next point, that is accrual basis of accounting. When we talk about the accrual basis of accounting, it does not give a true and fair view of the profit and financial position. It gives a true and fair view of the profit and the financial position. And then the next point is may or may not give a true and fair view of the the profit and the financial position, or none of the above. So, in terms of accrual basis of accounting, how do we define it? Accrual base of accounting is basically noting down things as soon as it becomes due, right? So if we are going to note down things as soon as it becomes due, then how are we going to record it? In terms of accrual basis of accounting, we will record things as soon as we know about it. That is, it does not, it actually gives a true and fair view. Think about it, as soon as a transaction occurs, even if it's due, it's not paid yet, you record it. The balance sheet or the books of accounts becomes more reliable because of this. That means the organization is updating itself. The books of accounts are not something which may or may not be true. It is always true because everything that is happening around it, they are recording it, right? When the information about two different enterprises have been prepared and presented in a similar manner, the information exhibits the characteristic of verifiability, relevance, reliability, or none of the above. So when we define this area, whenever an information is given of two different organizations, so say we have an organization A and we have an organization B. So if both the organizations are having, they would like to know about each other. So that is based upon, or you can say they are providing their information in a similar manner. So what is it that is happening? Is it the information is getting verifiable, or is it becoming relevant, or is it becoming reliable? Or I would say the correct answer should be comparable. Ultimately, the books of accounts should be something which can be compared with each other. Now, if we are looking forward to A and B and they prepare it in such a way, for example, there's a branch manager of branch A and the branch manager of branch B. In a similar kind of working, they are both working in the city. So then, if you know that they are working in the same city and that too in the prime locations, then this can be compared. What was the performance of these two organizations? While if these are not similar or working in a similar environment, then it won't be something that you can compare. So basically, for comparing, you need similar situations or similar way of recording things. Only then you can look forward to it. For example, we can compare a class 10 student with another class 10 student only. We cannot compare it with someone who is in ninth or maybe in plus 2. That means in this case, even in the organizations, we are always making sure if we want to compare with each other, we need to record things as per our similarities, right? So the correct answer would be none of the above. Okay, the next question says, due to which concept qualitative transactions are not recorded in the books? The qualitative transactions are those transactions which relates to um, say a good, bad, or maybe better, those kind of things. We're looking forward towards the quality, loyalty towards an organization, dedication towards an organization. These are qualitative factors, but do we record it in the books of accounts? And if we don't record it, then what's the reason behind it? Is it the business entity concept, or the money measurement concept, historical cost concept, or the dual aspect concept? The concept which is responsible for this is money measurement concept. Money measurement concept clearly says anything which can be denoted in terms of money, only that should be recorded in the books of accounts, nothing else. So the correct answer would be the money measurement concept. The correct answer is B, the money measurement concept. Next question. If the assets of the company are of rupees 1,76,000, the liabilities are of 46,000, then equity is of, what's the value of equity? 1,30,000, 2,12,000 or 86,000. What would be the value then? If we look forward to this, then okay, let's look at you have heard about the dual aspect principle. Dual aspect principle that says that debit is equal to credit, or it also talks about the balance sheet equation. This equation is also called accounting equation, and this is also called basic accounting equation as well. But there are different names given to this specific equation, right? So when we talk about this equation, the question says what is equity? Then what do you mean by equity is the first question that I would like to ask. What do you mean by the term equity? Equity is the amount that you invest in the business as the proprietor or the owner of the business, right? So that is the amount that the person himself puts in the business, and whatever money he puts into the business, then whatever money is falling short, then he'll take it from other people and then put in the business, right? So it would be based upon whatever assets we are building up. That's because we would be adding up our liabilities. That means the amount which we have taken from others plus our capital. Capital means the amount which I have invested myself into this. So it would be assets is equal to liabilities plus capital. If the assets are given, the assets are of rupees 1,76,000 and the liabilities are of 46,000, and we are not knowing what exactly the amount of equity is. So there's a question mark here. How do you find it then? It would be 1,76,000 minus 46,000, giving you an amount of 1,30,000, right? So this is the formula that we are going to use. That is, assets is equal to the amount I invested in the business, that is called capital. And if my amount wasn't sufficient, I took a loan from you, that is liabilities, right? So that's the answer. Next question. Which of the following limitations of accounting states that accounts may be manipulated to conceal vital information? Is it accounting leads to window dressing? Accounting is not fully exact? Accounting ignores price level changes? Or accounting ignores qualitative concepts? Actually, this kind of question contains all the limitations of accounting. So let's cover it in a smart manner, because one question would be giving you multiple answers. Number one, accounting leads to window dressing. It says if you look at the window of an organization, the window is beautifully decorated. What will you think? That the entire organization would be like that. Why, right? That's the first perception we form towards the organization, because from where we are looking, that place is beautifully decorated. So we'll be like, okay, the entire organization would look like that. That is window dressing. But when you open inside, it might be just the window that has been decorated, nothing else. So it is basically deceiving the people and showing them that the books of accounts are perfect, but they aren't. That is how they define the term window dressing. This is the point which is the answer. That is, we manipulate the books of accounts and we show it like that, that we are all fine. There is no manipulation in it. There is nothing like it's bad or there is some fraud going on. No, we won't show it. We'll just show that it is absolutely fine. That is how we manipulate the books of accounts. Then accounting is not fully exact. We can say that because there are certain things which are inherent limitations of accounting. For example, number one, we do not record the qualitative aspects, while sometimes the qualitative aspects plays a very important role in whatever the current scenario is. And secondly, it is not fully exact. That is why in terms of qualitative, we leave a good part. We leave the qualitative part and we pick only the quantitative part, which does not make sense. Then accounting is not fully exact is based upon this area. While when we talk about the price level changes, there's one problem with accounting. Think about it, in the banks, even if you have to report and revalue all the assets every single day, will it be a good job to do? It won't be. Why is there a need to revalue the assets every single day? It's going to be such a strenuous task. They'll say that only if we are selling the books of if we are selling the that particular asset, only then the value should be taken. If we are looking forward to considering the inflation for every single day or maybe even a month, that means we are going to do the same process 12 times a year, while we are already struggling with fulfilling the requirements which SEBI has been asking, which is asked by RBI. We cannot record all these things. That is an inherent limitation, that we cannot record things at the price level changes. We record things at the historical cost because of this nature, that whatever we purchase, just record the value at the price that we purchase at. Do not keep on revaluing it every now and then till the time you're selling it. Otherwise, you are exhausting yourself. That is how we can call it, right? So then the correct answer would be accounting leads to window dressing. That was the correct answer, but the other points also covers a good part of the various advantages and disadvantages. So that's why I've covered it in depth, right? Okay, next question, everyone. What would happen if revenue expenditure is incorrectly classified as capital expenditure? We have an expenditure, right? There's an expenditure that the organization incurred, and then when they did that expenditure, there are two kinds of expenditures. One is revenue, one is capital. If I get an asset is something which helps the business to grow. It helps the business. It isn't the thing which is sold. That is the difference. For example, if I'm a professional and I need books, I'll not sell these books. I'll use these books to acquire knowledge. So for me, book is an asset, right? While if I talk about being a bookseller, then book is a good for me. It's not an asset because I'll sell it and then generate my money through it. So basically, what if you take an asset, if you take an expense as an asset, then what will happen? Think about it. Or normally, we find the profit or loss through this. We record the incomes, then we deduct the expenses, and then we find the profit or loss. And somehow we failed to record an expense. है ना? If revenue expenditures is incorrectly classified, we fail to record an expense, so our profit has increased because of this. That means increase in liabilities is there, increase in loss, increase in profit or reduction of loss. Our expenses are recorded at a lower amount rather than its exact amount. So what would be the impact of it? It would be either the profit will increase, or if there was a loss, since the expense has declined, it would fall. So there is increase in profit or reduction in loss. Right? Now, documentary evidence. In terms of documentary evidence in a specific format used to record the details of a transaction is known as account, voucher, journal, or ledger. This is something which every bank records. So every bank has got vouchers, right? So vouchers are the areas where they record all the transactions as a documentary evidence. For example, if I deposited money into the bank, it is given in the pay slip, na? So whatever money I deposited, one part of it is given to me, one part is given to you. So then all these things are happening. So this is basically a voucher. Voucher, it's basically a written evidence in support of the business transaction, is called a voucher. Vouchers are primary evidence of the business transactions. It is a proof that the business transactions are occurring, and we need to note it down accordingly. Okay, here comes the next question. It says a company lost vital machinery in an accident on 2nd of March 2022. Then which will have adverse effect on the production. It is going to impact the production in any case. As a result, it is likely to lose its business to its competitors. The company needs to disclose this fact in the annual report ended in 31st March 2022 because of which principle? Materiality, then money measurement and full disclosure, then money measurement or full disclosure. What is the reason why that we have to tell the shareholders about the loss that has happened with us, right? Why would we tell about a loss that might occur? Because second has already 2nd of March it has happened, and for a good amount of time we will not be having any kind of transactions. Why we won't be having any kind of transactions? Because the vital machinery is gone. How will we produce all the goods that are required, right? So then if we do not know what we're going to do about those goods, then we'll have to disclose it to the people. But is it full disclosure, or we are going to use materiality, or only the relevant information is being disclosed? This is a confusing question. It is only the materiality point. Whatever is actually material for the shareholders, we're going to tell them, because this is going to impact the going concern of the organization. If the vital machinery is gone and the organization is not buying a new machinery yet, then it will impact its very existence in the world. So right, so when we talk about this scenario, it is going to impact. It's always better that you tell people that there's something that is happening, and this is how you can save yourself from the negative image that can build up by concealing the vital facts. Okay, so this is it. That is it for the day. If you're looking forward to any of the JIB or CIB classes, we have started with our batches for JIB, for the CAIIB, and soon we'll be starting with the classes of JIB as well. So if you're looking forward to that, you can review it on our website. Okay, so what you can do is you can go on to our website or on our app www.adda247.com. As soon as you go there, you'll find it here. There we have in the banking section, the first is JIB and CIB. We have a JIB and CIB Mahapack. And if you're looking forward to the Mahapacks, you can also review it. And also we have the JIB 2023 batch as well. There you can look forward to our batches. The batches are just about to start. It would be started from then 16th of December. There's a bilingual batch, and then there's an English batch which you can review. So this is what you can do. These are all the areas where you can look forward to. The classes would be starting from 16th of December, and all the details regarding the classes are provided here. And all you can do is the faculty who will be teaching the entire area of what are the number of hours, 145 hours, 73 test series would be available, and over 67 ebooks are opened up for you for this examination. It would be as per the latest syllabus, and all you can do is you can click on the area of buy now, and you can use the code Y541. There you'll get a discount of 81%. If you'll go through your app, then you'll get a discount of 81%. It is for a limited period of time. This would cost you 3999.20. Right? So if you're looking forward to it, then kindly go ahead and check it out on our website or in our app to join our classes within time period, so you can join it from the very beginning, and at the same time review the live classes. So live classes is definitely more helpful as compared to the otherwise, because you can look forward to the direct class and you can have a word with the faculty directly, right? So if you're looking forward to that, then kindly go ahead and check it out. Even the JIB and CIB Mahapack is also available for you. Double validity is going on. Again, this is for a very limited period of time. All you can do is go ahead and check it out. You will get either the 12 plus 12 month validity is there, 6 plus 6 month validity is there. If you look forward to the JIB Mahapack, if you look forward to this Mahapack, you'll get over 600 hours of videos, 258 test series, then 525 videos, 243 ebooks, and along with this, you'll not only get these, there is other part as well, right? That it is, you'll get live classes, all mock tests, all video solutions, then all revision batches, then all video classes, then ebooks, numerical batches, case study batches, topic wise questions, as well as in-depth analysis. That means the entire JIIB is here. So if you're looking forward to it, it includes both English medium as well as bilingual. So you can look forward to the class through your, on the basis of your comfort, and all the classes are opened up for you, right? So if you're looking forward to this, then kindly do not delay, because the double validity will end soon. So go ahead and check it out. Thank you, everyone. We'll be meeting tomorrow.